Hello, everyone, and welcome back to Global Macro Deep Dive. I'm Sarah, and today we are tackling a story that I think we all lived through, emotionally at least, a couple of years ago. Do you remember 2023?
Oh, vividly. It was the year of the financial apocalypse, wasn't it?
It really felt like it. If you opened Twitter, or X, or YouTube back then, you would have sworn the US dollar was on its deathbed. The headlines were relentless. Things like the end of the dollar era or the birth of the BRICS currency.
Right. Or the yuan will take control tomorrow. It was a very specific, very intense narrative.
Exactly. But here we are. It's 2025, and the world looks, well, surprisingly familiar. So today we're going to ask the big question. What happened to the collapse? Why, despite the debt, despite the politics, is the US dollar still the absolute master of the global economy?
It's the question of the decade, really. We're going to look at the invisible engineering that keeps the dollar on the throne. And I promise you, by the end of this, you will never look at the money in your pocket or your bank account the same way again.
So, David, let's ground this in reality. Because the vibe in 2023 was that the dollar was crashing. But if we look at the hard data now, in 2025, what do we actually see?
We see a reality that completely contradicts those apocalyptic predictions. If you look at the global markets today, the dollar isn't just surviving, it's dominating.
Give us the numbers.
Okay, let's look at the IMF's latest data from mid-2025. They updated their COFR database, that's the composition of foreign exchange reserves. The US dollar still makes up 59.2% of all global reserves.
Nearly 60%. That's massive.
It is. Compare that to the euro, which is sitting at about 19.6%, or the Chinese yuan, the renminbi, which everyone said was going to take over.
Right. The yuan was supposed to be the dollar killer.
Exactly. But in reality, it barely scratches 2.8% of global reserves.
Wait, less than 3%? After all that hype?
Less than 3%. And that's the brutal reality. You see, central banks in places like Brazil or India, they might talk a big game politically. They might criticize the dollar in speeches. But when comes time to actually save their nation's wealth, they don't buy yuan. They choose the security of U.S. debt.
That's a classic case of watch what they do, not what they say.
Precisely. Money talks. Ideology walks. And it's not just reserves. Look at transactions. 88% of all currency trades, Forex, involve the greenback.
88%?
Hold the line,
Yes.
it's coming back up.
And when there is a crisis, say something goes wrong in the Asian markets, investors don't run to the yuan or the rupee. They run to U.S. Treasury bonds. It's a flight to safety.
So the death of the dollar was, let's say, greatly exaggerated.
It was a narrative, not a reality.
Okay, so we've established that the king is still alive, but why? We know the U.S. has problems. The national debt is over $36 trillion. The politics are polarized. Why is the world still addicted to Washington's currency?
Get out!
That is the fascinating part.
Sell
The answer
50,000
isn't
at
simple,
45.
but
I need a price
think
check
of it
on the
this
euro.
way.
It's moving too
The
fast.
dollar
We have to hold.
isn't just
Get me out of
paper
those
money.
bonds right now.
It is the operating system of the planet.
An operating system, like Windows or iOS?
Exactly. Imagine trying to change your operating system when everyone else, from a massive oil seller in Saudi Arabia to a freelance programmer in Argentina, is using the same software. It's a titanic task.
Because everything is compatible with the dollar.
Right. Let's look at international trade. Imagine you're a company in Chile and you want to buy machinery from a company in Vietnam.
Okay, Chile to Vietnam.
You don't pay in Chilean pesos, and you certainly don't pay in Vietnamese dongs. Those currencies aren't compatible directly. So what do? The invoice is issued and paid in US dollars.
Si cae por debajo
It's the
de este
common
nivel,
language.
cerramos
It
la
is.
posición.
In 2025, the dollar is still the invoicing currency for 90% of oil and gas trade, 80% of industrial metals, and almost 100% of large-scale agricultural trade.
So as long as the world needs energy and food, they structurally need dollars to pay for them.
Exactly. It creates
Soy
a structural
rica, miren
demand.
todo este
You can't
dinero.
just decide to stop using it without breaking the supply chain.
This brings up a concept I saw in the research called the network effect. Can we unpack that? Because it sounds like the main reason for this stickiness.
It absolutely is. The best analogy here, and this really helps visualize it, is WhatsApp.
WhatsApp? Okay, I'm listening.
Think about it. Are there messaging apps out there with better technology than WhatsApp? Probably. Maybe Telegram or Signal are more private or have better features.
Sure, I hear that all the time.
But why do you still use WhatsApp?
Because that's where my mom is, that's where my work group chat is, everyone I know is there.
Bingo. You stay because everyone is there. Moving the global financial system away from the dollar is infinitely more complex than switching chat apps. It's about the inertia trap.
And I assume there's a cost involved in switching too.
Huge costs. We call it transaction cost. The market for the dollar is the most liquid, the deepest in the world. That means the spread, or the difference between the buying and selling price, is tiny.
It's cheap to trade.
It's incredibly cheap and efficient. If you try to trade directly between two minor currencies, the costs jump up. Plus, there's the infrastructure, SWIFT.
SWIFT is the messaging system for banks, right?
Correct. And SWIFT still speaks dollar as its primary language. So the entire plumbing of the world is built for this one fluid. Changing the pipes is expensive and risky.
I want to pivot to something you mentioned earlier about saving. You said central banks buy U.S. debt. This brings us to what the document calls the best-kept secret of hegemony, the depth of capital markets.
This is the point that usually stops the dollar collapse arguments in their tracks.
How so?
Let's play a game. Sarah, imagine you manage a sovereign wealth fund, like Norway or Saudi Arabia, and you have $500 billion in cash that you need to park somewhere, safe.
Okay, $500 billion. That's a good problem to have.
It is, but it's actually a logistical nightmare. Where do you put that much money without completely breaking the market?
Well, what are my options? Can I put it in China?
You could try, but China has capital controls. That means you can put money in, but you can't necessarily get it out freely. The government decides if and when you can move your funds.
Okay, that's a deal breaker. I need access to my money. What about Europe?
Europe is safer, but the bond market is fragmented. You have German bonds, Italian bonds, French bonds. They all carry different risks. There isn't one single European bond market that is big enough.
Gold? Everyone loves gold.
The gold market is actually too small. If you tried to buy $500 billion worth of gold, you would spike the price artificially and ruin your own entry point.
So I'm running out of options.
You have exactly one option: the U.S. Treasury bond market.
That's it?
That's it. It is the only market on the planet with enough depth and liquidity to absorb trillions of dollars instantly. It guarantees you can sell those bonds and get your cash back in seconds, 24/7.
So as long as there is no other bucket big enough to hold the world's savings...
The dollar has no real competitor. It's not just about preference. It's about physics,
This
volume.
is absolutely
Until another
insane.
market can offer that
profits
scale
just
and legal
keep
security,
rolling in.
the dollar remains king.
David, this paints a very robust picture. We have the network effect, the infrastructure, and the sheer size of the markets. But we haven't talked about the challengers. The BRICS nations made so much noise about a common currency. And what about crypto? Bitcoin was supposed to fix this, right?
The BRICS and Bitcoin. Two fascinating stories. One is a mirage, and the other... Well, the other is actually an unexpected ally to the dollar.
Wait, crypto is an ally?
It's ironic, but yes. And the failure of the BRICS currency is a lesson in why trust matters more than politics.
Okay, we are going to take a short break. When we come back for part 2, we're going to dissect why the BRICS failed to launch, the paradox of digital dollars, and the zombie apocalypse scenario that proves the dollar's dominance. Stay with us. Welcome back to part 2 of our deep dive into the global economy. Before the break, David, you explained how the network effect and the sheer depth of U.S. markets make the dollar almost impossible to replace.
Right. The plumbing of the world is built for the dollar.
But let's talk about the challengers. For years, we heard about the BRICS nations: Brazil, Russia, India, China, South Africa. They were supposed to launch a common currency to dethrone the dollar. What happened to that project?
Ah, yes, the BRICS currency is the elephant in the room. The short answer, it failed because of a massive deficit of trust.
Trust.
To have a global reserve currency, you need 3 ingredients: rule of law, open markets, and transparency.
And the BRICS don't have that?
Let's look at the competitors in 2025. Take China. They maintain strict capital controls.
Meaning the government controls the money flow.
Exactly. If you invest in China, the Communist Party decides when and how much money you can take out. No global investor is going to put their life savings into what is essentially a golden cage.
That makes sense. What about Russia?
Sanctioned and disconnected from the Western financial system. And India, their currency, the rupee, isn't fully convertible, and they are focused internally.
So trying to merge these economies into one currency is a nightmare.
Imagine trying to coordinate monetary policy between an autocracy like China and a democracy like Brazil. It's impossible.
But aren't they trading in local currencies? I read that Brazil pays China in yuan now.
They are, but that is bilateral trade, not a global reserve currency. And here's the kicker. When Brazil ends up with a surplus of yuan, do you know what they often do?
What?
They look to swap it for dollars so they can buy things from the rest of the world.
That is telling. Okay, let's pivot to technology. The Bitcoiners. They predicted that crypto would kill the fiat dollar, but you hinted earlier that crypto actually helped the dollar.
It's one of the greatest ironies of 2025. The crypto market has reinforced the dollar.
How is that possible?
2 words: stablecoins.
Like Tether and USDC?
Exactly. These are digital tokens pegged 1-to-1 with the dollar. By 2025, the market cap of these stablecoins has topped $200 billion.
No, aguanta, esto
That's
sigue
a lot
subiendo.
of money.
It is, and that means there are hundreds of billions of real dollars buying U.S. Treasury bonds to back those digital tokens. But more importantly, look at the usage. People in high inflation countries, Turkey, Argentina, Nigeria, they're not using crypto to buy yuan.
They're buying digital dollars.
Correct. They are using blockchain networks to escape their local failing currencies and buy USDT or USDC. So blockchain, the technology created to decentralize money, became the most efficient delivery vehicle for the US dollar in the developing world.
That is a paradox I didn't see coming. Now, we have to talk about the muscle behind the money, geopolitics.
Never forget the golden rule of economic history. The reserve currency always belongs to the dominant military power.
Because money needs protection?
Because trade needs protection. The U.S. Navy guarantees free trade on the oceans. They protect the straits where oil and merchandise travel.
So allies use the dollar as a sort of insurance policy.
It's a security umbrella. In a world fragmented by conflicts in Eastern Europe and the Middle East, we see a flight to safety. When war breaks out, nobody wants to experiment with new currencies. They want the currency of the country with 11 nuclear aircraft carriers.
We can't let the U.S. off the hook completely, though. We have to talk about the debt.
$36 trillion. Chronic deficits. How is this sustainable?
It seems unsustainable, but there is a concept called the Triffin dilemma.
Triffin dilemma. Unpack that for us.
Basically, for the dollar to be the global currency, the U.S. must run deficits. They have to flood the world with dollars so that other countries have enough liquidity to trade.
So, if the U.S. stopped printing debt,
The world would run out of dollars and global trade would freeze. We actually saw a glimpse of this in March 2020. The world needs the U.S. to be in debt.
but for how long?
That's the catch. Investors know the debt is ugly in the long term, 30 or 50 years. But in the medium term, the U.S. is the cleanest dirty shirt in the laundry basket.
Meaning everyone else is worse?
Exactly. Europe has stagnation. China has a demographic crisis. The U.S. is still the most dynamic economy in AI and biotechnology.
1230. The future. Erosion, not collapse. So, David, look into your crystal ball. How does this reign end? Does it end?
History teaches us that no currency lasts forever. The Dutch guilder had the 17th century. The British pound had the 19th.
And the dollar has had the run since 1944.
Right, but the decline is a slow erosion, not a sudden cliff. It took the British pound 50 years to lose its status, even after the U.S. overtook them economically.
So, what's the scenario for 2030 or 2040?
We likely move toward a multipolar currency world. The dollar remains the first among equals, maybe dropping from 60% of reserves to 45% or 50%. It shares the stage with a digital euro and maybe a regional yuan in Asia, but it doesn't collapse.
It sounds like a slow evolution rather than a revolution.
Exactly, because at the end of the day, the dollar is a belief system.
A belief system.
Let me leave you with this image. Sarah, imagine tomorrow there is a global zombie apocalypse crisis. Everything is falling apart.
Okay, terrifying.
You have to choose one suitcase to survive anywhere on the planet. One suitcase holds $1 million in gold, one holds $1 million in yuan, one holds a hard drive with Bitcoin, and one holds $1 million in cash, $100 bills.
I see where you're going with this.
Gold is too heavy to carry, the yuan is hard to exchange, Bitcoin needs electricity and internet.
I'm taking the suitcase of dollars.
You and everyone else. That universal reliability is a defensive moat that technology and politics haven't been able to cross it. The king might be aging, but the throne is still his.
David, that is a powerful way to put it. Thank you for walking us through the invisible engineering of the global economy.
My pleasure.
And thank you all for listening. So the next time you see a headline about the end of the dollar, remember the suitcase test. I'm Sarah. This is Global Macro Deep Dive. See you next time.